Welcome back, Stock Talkers. If you guys are new to my channel, welcome. My name is Julie, and in today's video, I want to give you briefly 5 stocks that I think look very attractive as far as price point goes. My first company that I have is Salesforce. And if you're not familiar with Salesforce, it engages in the design and development of cloud-based enterprise software for customer relationship management. Its solutions include Salesforce automation, customer service and support, marketing automation, digital commerce, community management, collaboration, industry-specific solution, and Salesforce platform. The firm also provides guidance, support, training, and advisory services, and the company was founded in 1999 and has its headquarters in San Francisco, California. Now let's go right ahead and take a look at the chart because I am a very technical trader and I always like to refer back to the chart, so I will never enter blindly into a stock. Now, a lot of traders will use the 4-hour chart. And if we were to look at the 4-hour chart, we can see that Salesforce has just been declining ever since it's made its high back in November, and it's now trading around $200. If we were to go on the 1-year chart, we can see the same. It's just on a decline, and it doesn't seem to be finding support anywhere. So that's why I like to go on the 3-year chart, especially with companies that are actually in the S&P 500. Generally speaking, are pretty solid companies and have proven themselves, which is why they are in the S&P 500. So if we take a look at the 3-year chart, we can see that Salesforce, it looks like it's about to find support around the 200-day moving average, which is my yellow line over here. And if I were to draw a line, and I'll start just right over here and just pull it right across, we can see that this area was actually previously resistance prior to the COVID crash. After decline to $115, it made a rapid recovery and it broke resistance and made new highs. And it looks like it has then found support here. So that like 197, 198 is kind of the support area. Again, right now we're sitting right around $200. I would definitely make sure it stays above the support line if you guys were to enter this position, unless of course you are buying this for the long term. If you guys are interested in swinging this position, I would look for the reversal before entering the stock. This way you don't waste a lot of time on buying the stock and waiting for it to reverse. However, if you guys are in it for the long haul, then buying Salesforce on the 200-day moving average is a great entry price point. At least that's my opinion. And if for whatever reason it were to drop further, then of course, yes, you can average down into your position. Now, I do want to point out that Salesforce does have earnings report coming up, which is on March 1st. So definitely watch out for that. As we have seen with other stocks that have reported lately, earnings can either make or break the stock. So we can either see Salesforce jump higher or decline even further. So if you think it's going to increase in price, then perhaps you might want to start a position now, and this way you're already in the position. However, if you think it might drop further, but you're not certain, you could start a small position, and then if it does drop, then you could add to your position if you are planning on holding this for the long term. The second stock on my list for you guys today that I have is Teradyne. And Teradyne supplies automation equipment for test and industrial applications. It operates through the following segments: semiconductor test, system test, wireless test, and industrial automation. The semiconductor test segment designs and manufactures as well as sells and supports semiconductor test products and services which are used for both wafer level and device package testing. The system test segment comprises of defense and aerospace, storage tests, and production board business unit. The wireless test segment designs, develops, and supports advanced wireless test equipment for the manufacturing of wireless devices such as smartphones, tablets, notebooks, laptops, and personal computer peripherals, and other Wi-Fi, Bluetooth, and near-field communication and cellular-enabled devices. The company was founded in 1960, but it's only been trading on the S&P 500 for the last year and a half. So this stock was actually just added newly to the S&P 500. Now, taking a look at the stock, and again, I'm on the 3-year chart. We can see that it's finding support on the 100-day moving average, so that's why I like the stock right here. The company already reported their earnings, so you don't have to worry about that coming up anytime soon. And we can see based on the earnings, we did have a drop, but the earnings actually came in better than expected. So I think this was definitely an overreaction. So if you guys are interested in Teradyne, of course, always do your own research additionally on the company, but I think this is definitely a great entry point if you guys are thinking about purchasing the stock for the long term. Additionally, this company does pay a dividend, although it's not really worth mentioning, but it's still good to know in the back of your mind that this company that you're investing in does pay a dividend. Now, moving on to my third stock on this list for today is Trane Technologies. And Trane Technologies is actually an Ireland-based company. And Trane Technologies engages in designing, manufacturing, selling, and servicing of solutions for heating, ventilation, air conditioning, and transport refrigeration. It offers air conditioners, exchangers and handlers, airside and terminal devices. The company provides climate control solutions for home buildings, homes, and transportations. So it actually engages in the designing, manufacturing, selling, and servicing for solutions of heating, ventilation, air conditioning, and transport refrigeration. It offers air conditioners, exchangers, and handlers. In addition, it offers energy and facility management, installation and performance contracting, repair, maintenance, and rental services. Trane Technology was founded in 1985 and has its headquarters in Swords, Ireland. Now, taking a look at Trane Technologies on the chart, the reason I like this chart is because it also is sitting currently on the 100-day moving average. To me, that is always a great entry spot, especially if you are looking for companies that you are planning on holding long term. So you always want to enter when you see they are trading on major moving averages. So the 100-day moving average would be a major moving average. Also, we can see that it already reported earnings and it actually came in better than expected. So that's great, and you don't have to worry about upcoming earnings. Additionally, this company pays a dividend of 1.58. Again, this is not a company I would buy for the dividend solely. However, it is nice to know that the company that you are investing in is paying a dividend. The fourth company for today is Xylem, which engages in the design, manufacture, and application of highly engineered technologies for the water industry. It provides water and wastewater applications with a broad portfolio of products and services addressing the full cycle of water from collection, distribution, and use to the return of water in the environment. It operates through the following business segments: water infrastructure, applied water and measurement and control solutions, water infrastructure, applied water and measurement and control solutions. The water infrastructure segment focuses on the transportation, treatment, and testing of water and offers a wide range of products including water and wastewater pumps, treatment and testing equipment, and controls and systems. And this segment includes brands like Flight, Wedeco, Goodwin Pumps, WTW, Sanitaire, YSI, and Leopard. Now, this company was founded in 2011, so it's fairly new and is based in New York. Looking at the chart of Xylem, and I'm not sure if I'm saying this right, but let's go with that. We can see that this is even offering us a much steeper discount. It's currently sitting on the 200-day moving average and also already reported earnings, so that's out the way. Now, their earnings also came in much better than anticipated, of 63 cents versus 61 cents. Also, this company does pay a dividend as well. Again, this is a minimal dividend that they're paying, but nevertheless, they do pay a dividend. So in my opinion, this is definitely a great buy. And again, similar to some of the other stocks that we've taken a look at, if we were to draw a line, and I can do that for you real quick, we can see that it's currently finding support where it previously had resistance. So as long as we can stay above, I think this would be a great entry. But again, if you are looking to purchasing this long term, then the 200-day moving average would be a great entry point, and you could enter the position if it does fall any further. Also, I always like to point out that if you guys are able to accumulate 100 shares of any of the companies that you guys want to invest in, I think we're seeing a lot of sideways moving right now. So you guys could always sell cover calls against your shares and make additional income to offset the overall cost of your shares. So just a quick side note on that. And I did make a video about that. I will leave that in the description box below for you guys, so you guys can see how you can make additional money. Then my last talk for you guys today might come to a surprise, but it's Clorox. And if you guys are not familiar with Clorox, Clorox actually manufactures and markets consumer and professional products for cleaning. And the company was founded in 1913. So looking at this chart, we can see that this has fallen well below all the moving average, and I am on the 3-year chart, So we are currently sitting around 146, and we are well below any of the moving average that I usually use. However, I like Clorox because Clorox in itself is not going to go anywhere. At least I don't think it will. Additionally, it pays a dividend, and the annual dividend is actually 3.21%, which the sector average is typically only 1.5%. So it's over doubled the yield. So especially at this price point, I think Clorox is definitely a great buy if you are planning on holding this for the long term. And this is one of the stocks I do want to point out that it has actually had dividend growth for the last 13 years. And it's been actually increasing its dividend year over year. Maybe not by much, but nevertheless, it is increasing its dividend. So as always, make sure that you guys do your own research and on any of the companies that I'm giving you guys today. And I would be interested to find out if you guys like any of the companies I mentioned. If so, which one? So let me know in the comments below. And if you guys got anything out of this video, be sure to hit that like button and consider subscribing to my channel. And don't forget to share this video with your friends. And I'll see you guys in my next video. Until then, bye-bye.